Michael Carnevale is Branch Manager and Financial Advisor. Securities offered through Raymond James Financial Services Incorporated, 400 Southbridge Street in Auburn, Massachusetts, 1-800-657-9126. A member of FINRA SIPC and are not deposits, not insured by FDIC or any governmental agency, not guaranteed by Webster 5-cent Savings Bank, and subject to risk, may lose value. Webster 5-cent Savings Bank is not affiliated with Raymond James Financial Services Incorporated. The information contained in this report does not purport to be a complete description of the securities markets or developments referred to in the material. The information has been obtained from sources considered to be reliable, but we do not guarantee that the foregoing material is accurate or complete. Any information is not a complete summary or statement of all available data necessary for making an investment decision and does not constitute a recommendation. Any opinions are those of Michael Carnevale and not necessarily those of RJFS or Raymond James. Expressions of opinion are as of this date and are subject to change without notice.
Good afternoon, ladies and gentlemen. This is Richard Morco from the Long Hill Report and Conversations with. We are talking again with Mike Carnevale, who is going to tell us where the economic world is headed. Think you can do that, Mike? We have a lot of faith.
Going to attempt to.
Okay.
Going to attempt to.
So, I can see here, February is not usually a good month.
Historically, it's one of the worst months of the year.
And it kept to that.
Lived up to that.
It lived up to that this month. And we're glad to see it gone.
We are.
Do you think March is going to be better, or just living in hope?
Well, March is kind of sort of in between. Ranks 5th of the 12. But the last 4 Marches have been positive. And the interesting thing about March is a lot of extremes have happened in the month of March. The financial crisis back in 08 and 09 ended in March of 09 when the Dow got down to 6,500. It's 43,000 now. And then the worst March was the first month of COVID-19, March of 2020, when the Dow dropped 13%. So March can produce really big results either way. So hopefully after a not so great February, we can gain some of it back in March.
Well, you say it's a sort of a middling month, not unless something real, something had to happen for those Marches. Something, when you mentioned about COVID, you mentioned about the 08, 09, something big had to shake things up.
Right.
So, anything big on the rise?
From day to day, we don't know, right?
We're gonna.
But
we'll call our archives and tell them to write that down.
Yes.
Day to day, we don't know.
Day to day, we don't know yet.
Okay.
But
and actually, I'm going to claim that I said that.
Okay, I will let you claim that. But it could be anything, and it's something out of the blue, right? Where we're gonna, and we don't know what it is, right? I mean, I don't think anybody knew we were going to make a statement that we were going to take over Greenland, or that I don't think anybody knew we were going to make a statement that, well, Canada is going to be the 51st state. So it'll be something out of the blue.
Well, what happened when nothing big happened when he said that, though, did they?
No, but
I mean, everybody, this is Trump's bombastic. I get that, but you got to admit that. So Greenland, all that. There's a lot of ho hum to a lot of what he says.
Correct. But I think it's starting to have a cumulative effect. Especially with the tariffs and across the board 25%, and then the market goes down big, and then the next day it's like, well, I'm going to within 30 days, and then the market goes up big, and for people who are in the market, that can be kind of unsettling, and it's the.
But you think you got to kind of get a little over this. For example, in his first administration, supposedly he was going after Rocket Man.
Right.
Remember that?
Yes.
And I said, maybe we'll talk.
Yeah.
Yeah, this is the guy.
Yeah.
Gaza. He said, we're going to take over Gaza.
Yeah.
That ain't happening.
Right. Right.
And, you know, by now, if you're saying, oh, that's interesting, maybe I can get a cartoon out of this.
Yeah.
That's okay.
Right.
But if you're really saying, this is changing anything, next month we'll talk and you'll say, you bring up something he says that had a several hundred point Dow drop or advance. I want to hear it. Otherwise, really, what's going on?
Yeah, no, I agree. I don't think long-term it will have an effect. But more and more people are so short-term focused that they're making they're making long-term decisions with these short-term things, and that's usually the wrong thing to do. But emotions,
You know,
it's the emotions of it.
Nobody down on Wall Street is doing that. I
No.
mean, a few people,
No.
maybe
It's
maybe people you know.
It's the individual investors who are doing that.
But
Correct.
it's not a widespread thing.
No.
But anybody who is in an index fund knows some stocks do well when somebody does something bombastic. Some of them do poorly. So you know, I would say 80% of the world just. Oh, did he say that again?
I did. I agree. But it's that 20% or that.
Is that earth-shattering? I mean, that 20% is always there.
It is, but those are the very ones who.
Who are your customers?
Yeah, and who need to
I agree.
take the emotions out of it.
Oh, sure.
You know, and that's, for a lot of people, that's difficult to do.
It is.
You know.
And since the start of the world.
Oh, it's always going to be that
Since
way.
the start of the world, or since Mike Carnevale got into the business.
Yeah.
When has that not happened?
Oh, it always has.
Yeah.
And
Can we stop you from worrying?
well, the hope is that
The
you
hope.
can convince.
The hope.
Yes, that you can convince
Hope
more and
springs
more people
eternal
not to do
in the
that.
human breast.
Yeah, hope that they can, you know, sort of learn from that.
But then you get to come once a month and meet a cynic.
Yes. Yeah.
Who, verbally anyway, gives you a little pat
Right,
here.
right.
Come with
Yeah.
reality.
Yes. Yeah. But I mean, it's like, and that kind of goes back to the, you know, the thinking that, you know, I hope the people who need the help can see that and not be the ones that get hurt by it.
And I hope
And that's tough to do.
I hope I can win Powerball without buying a ticket.
Well, that's a different story
Oh,
completely.
that's basically the same.
You know, I mean, but it's sort of like you can't let the day-to-day stuff influence what you're planning for you know, the next 5 or 10 years. But
Wait a minute.
if
I've got
you just want to write that down, get a clean sheet of paper. Use pencil in case you make a mistake, you can erase it. But no, you know, it's, you know, I've always believed, you know, the way you can make money investing is not picking this stock or this fund or this index, but it's just take emotions out of it and just keep doing it every day, and you know, the rest takes care of itself. It's when you try to overanalyze it or try to make a decision on something that somebody said on a particular day, that's when you can go wrong.
So Abe, stop the analyzing.
Yes.
Okay, so we're done today, ladies and gentlemen.
Well, no, I mean, stop the day-to-day
Okay, stop the day.
and
I agree.
you know.
I agree.
But, you know, that's easier said than done for some people, you know. I mean, I'm of the opinion personally, I don't care if it goes up or down on any given day. If you take a look at history, if you're in it for the long term, you're going to do fine. But that can be tough to grasp, you know, for some people.
Well,
And that's how they get hurt. And they get in after it's gone up a lot, and they get out when it goes down, and they keep doing that back and forth, and over time you end up with nothing.
Well, there's an aspect of luck in that if you had put all your money in the stock market the day before, what was it, Black Friday? Or
Correct.
Well, you know, you'd be done. You'd be cooked. But
Yeah.
if you started putting your money, you know, a few months, a few years after that, and just keep doing it long term, you'd have ended up in the clover.
Right.
So this, you know, luck is a big component of timing.
It is. It is. But even if you got in on the worst day, right at the top in 07 or the beginning part of 08, rode it all the way down to 6,500 and stayed there because you had a long-term time frame, would have all worked out.
And that is true. But all those things, even 08, 09, they were bad, but they weren't world-ending.
Correct.
In a sense, Black Friday was world-ending.
Yeah.
We've never seen, and let's hope we never do, we've never seen anything like that.
Right. Right.
So going along here,
Yes.
technicals, if you...
Okay. So obviously the Dow lost over 700 points in February, 1.5% loss. If you project that over a year, that's a pretty bad year. So you'd expect the technical indicators to have improved. And not only have they improved, but the direction or the sentiment short term has really improved. So that's a plus. So if you take a look at, well, you know, what could happen in the next 30 days? Just looking at the technical indicators, you would say, probably going to be a pretty good 30 days. We're probably going to get a recovery, 30 days. But again, you don't know, you know, what's going to be said that could alter that. But at least from the technical standpoint, the odds of the market going down a lot more from here don't look great. So March could be a pretty good month, at least a recovery of some sort. Some of them indicators are really at their extremes. Specifically, the stochastic oscillator, you know, the worst reading on that.
thing that I had
You have that,
inserted
yeah.
in my,
But it's working good now?
the ticker's great.
Good. The worst it can be is 100, actually at 100. The best it could be is at 0. And a month ago it was at 73. Right now it's at 18. So it's, I mean, things have deteriorated in the last month, which is good, which sets you up for, you know, a rebound.
Question.
Go ahead.
Now we go through these technicals.
Yes.
They're kind of, you know, you're saying long-term, be a long-term guy
Yep.
or gal.
Yep.
These are kind of a short-term thing.
They are.
So
I'm glad you asked that question.
do I ask the questions or not, ladies and gentlemen? Here he is.
The reason you want to look at these short-term indicators is to remove the uneasiness about what could happen. So you're looking long-term, so why are you focusing on these 4 short-term indicators? Because this will get you to the long-term. If suddenly if you look at these short-term indicators and you say, wow, they're really low, so yeah, I know the market has really dropped. So these indicators would tell me that, was it 73 1 month, close to the worst possible reading. Now it's at 18. Must mean the market has really dropped. And it can only go to 0, and it's at 18 now. The odds would favor some type of a recovery. So it allows you to, the technical indicators allow you to control your emotions. Yeah.
Well, that's, of course, if you're an emotional person.
Correct. Well, everybody is to a certain extent,
Wouldn't
right?
you say people who have the long-term outlook are not that emotional? I mean,
Correct.
they're emotional about some things.
Correct.
You know, like me, I get emotional when I'm hoping to win Powerball and not buying a
Not
ticket.
buying a
Oh, I
ticket.
get so emotional that.
Yes.
But about something like this, I would say, hey, I'm not the youngest person in the world. I've been I remember since before I was married. I was even
Old.
not like you.
Okay.
Anyway,
Okay.
anyway, I was already into the long-term mindset.
Yeah.
So these might be good to look at, but it wouldn't affect me in the least.
Yeah.
Because I think well, we've had discussions. I say eventually, everything eventually reduces to its absurd,
Right.
and inflation is going to become a really horrible problem in this country because it keeps on going on. But until the day of the denouement, you might as well not look at the short-term stuff and just stay where you are.
Yeah.
So that's kind of an unemotional thing.
Right.
So you really think there's that many people who need the boost of the short-termist things?
I think there are, yes. I think, because I think, you know, when something's going in one direction, most people think, oh, it's going to continue to go in that direction. So, oh, the market's going down. Oh, gee, you know, the market has really gone up a lot in the last few years. It's probably going to start going down now. Okay, so you take a look at these and you say, well, you know, that could happen. But based on these indicators, it's not likely to happen.
Okay, I'm going to go on a limb here and say I think people you mostly deal with, you know, you probably have people who come in and say it's time for me to put some money away.
Yep.
And then you have people who have been doing it for a few years. And then you have people who say, this has been really great these last 30, 40 years I've been with Mike. After the first few years, I would say the emotions are probably gone.
You'd be
Not-
no.
I would be surprised.
Most people's confidence level in the stock market is very shallow. Oh, you know, they're great when it's going up. Soon as it goes down a month, a little concerned. God forbid it goes down 2 or 3 months. Suddenly, I've seen, I don't want to say panic, but the concern starts building.
Even your long-termers.
Yep. And, you know, these things can, you know, put it in perspective.
Well, people out there in Charlton TV land, and if you really want to, you should be looking at what's behind these short-term indicators. Stochastic oscillator, volatility index, the New York 200-day NYSE moving average. These things, the fear and greed index, all these things may be worth some study.
Can kind of guide you to what is likely to happen, you know, in the next month or so. And so if it happens, you don't get excited. You know, the market's really high, say, right? Or you think it's going to go on forever. Well, the indicators say that, you know, we might be in a little short-term rough period. So if we do go into a rough period, it's no surprise, right? Because you kind of felt that that could happen. You know, so you look at, just as one indicator, that oscillator, it's very low. So, I mean, if I was guessing, I'd say the market probably is maybe not going to go up, but probably is not going to go down a lot more. So if you're thinking of getting out, probably not the time to do it, because we're at the low end of that technical indicator.
When do you say is the time to get out? I don't think you really think there's really a time to get out.
No, I mean, because no one can predict the future. Write that down. Nobody can predict the future. Time out for a minute. Good. You're guessing then. So 50-50 right. So the odds aren't in your favor, so why are you doing it? you stay in it long term. Bottom line is, most people are never going to need all the money they have. Most people. You know, if you've been investing for a long period of time.
Okay, if you're, yeah.
You know.
People go bankrupt too.
True. But I mean, we're talking non-speculating
Yeah.
people who are in like the S&P 500 or things like index. So, you know, the high quality stuff. So you look at these type of signals and you say, okay, yeah, you know, the market went down 700 points, and yeah, I mean, I wasn't surprised, you know, based on these technical indicators. You know, someone might say to me, geez, you don't get excited about anything. No, not really, because I really follow these indicators, and vast majority of times, these indicators kind of give you a feel for what's going to happen. I don't like it when it goes down 704 points in a month, but to say you were surprised, I'd be surprised if it snowed in July. That would get me a little worried. But if it snows in December, and that's all these indicators tell you, they're a good way to keep you kind of level-headed and not let your emotions run wild. Because that's what people do. It went down this month. I don't know how many times you hear people saying, well, it's gone down 2 months in a row. You know, if it keeps going down every month, that's a sign of not controlling your emotions. It's not going to go down every month. And if it's gone down 2 or 3 months in a row, these indicators would probably be at levels that would signal it's probably near the bottom. And when do you get out? You always get out, people. When do you make decisions? When you allow your emotions to make your decisions for you? Usually at the extremes. After it's really gone way up, oh, I got to get in because it's really gone up. When do you get out? After it's really dropped down, oh boy, I mean, I've lost so much, I can't lose any more, so I'm getting out. And that's all these things do. Now, some people don't believe in the technical analysis of it, but I guess the people that, you know, taught me and whatnot, we're technical analysts as opposed to fundamental analysts. So I put a lot of faith in the technical.
We noticed, Michael. We've noticed.
Yes, yeah, a tremendous amount.
Major news, because we're getting on here.
Not much major news.
Central banks, 6 central banks cut. Nobody increased. Oil fell. Oil is in the 60s now.
Yeah, now it's, yes, it's in the mid-60s
The
now.
mid-60s. I can't wait till it's a tank of gas to go down to New York City.
Well, maybe the next time you fill up, the price will drop a penny or two.
I'm hoping.
You know?
I'm hoping. Production fell 100,000 million barrels per day, 13.5 million. Drilling rigs have gone down. What's up with that?
Well, drilling rigs have been going down for a long time, you know, like well over a year. So it's probably that, you know, there are less small oil fields. And it's, you know, essentially if you take a look at like that rig count of 593, 75% of it is the Permian Basin.
Okay, so that was where you get your gas.
Right.
All right, Powell didn't say anything really, really big, just nice talk, more or less. And the Super Bowl, Philadelphia won.
Yeah.
Not good. Well, who likes Philadelphia anyway?
Nobody.
Who's the guy?
W.C. Fields.
W.C. Fields?
Yes.
Yeah. I actually, my favorite cousins, other than the ones around here, are in Philadelphia.
Okay.
So I have to say nice things about it.
Well, Philadelphia gets a bad rap, you know. The suburbs are nice, but the city is not.
Well, where aren't the suburbs nice?
Yeah.
There you go.
That's true. That's true.
What's your favorite part of Boston?
North End.
North End.
But,
That's only because the restaurant's there.
It's because
Hey, the best restaurant is not in the North End.
yeah, I would agree.
It's in Worcester, and I bet you don't know what it is.
I don't.
Mari e Monte.
Really?
Yes. Go there. I have relatives who come in from the West Coast and go there.
I'm a Galleria Umberto fan.
You would be.
Yes. Yes.
Okay. Yeah.
know where that is?
Is that on Shrewsbury Street?
No, no, no. That's on Hanover Street.
Oh, on Hanover Street.
It's
Okay.
open like
Oh, okay.
4 hours a day. When they sell out, they close. It used to be on Salem Street, like, do you know where the library is in the North End?
I probably have been by it, but
It's across the street from the library in the North End. It was a walk down. And it was
yeah.
it was run by a mother and like 2 or 3 sons. And it would be like, cash only, and when we sell out, we close the doors. Then they moved to Hanover Street, and the same type of thing.
It's still down. I know where. Yeah.
Yeah, no, now it's on Hanover Street.
It's yeah.
And it's sort of like, they open up at noon, the lines are out the door, starting at 11:30, and when they sell out, they shut the door. And you always like go in there when the tourists, pull out a credit card or something, it says, only cash. Oh, well, we don't have any cash. Oh, then you can't eat.
We watch you starve.
Correct. But
All right.
here's a Dixie cup of water.
All right, inflation is up.
Inflation's starting to go back up again.
Yeah.
And if these tariffs ultimately do take hold,
That's not inflation.
it's going to cause prices to go
Prices go up, but that's like
up. The rate will go up.
the rate will go up. That's not inflation. Inflation is the money supply thing.
Yeah.
Because they could cut tariffs and costs would go down, and you would say deflation. No, it's that supply and demand
Right.
and prices.
Right.
Gosh, come on.
But the rate is going up again. That's not good.
Oh, that is true, but that's just the Fed doing what the Fed does, increasing the money supply, and continues to go. Producer prices up. Core was up 0.3%, 3.6 in the year.
Mm-hmm.
Will they ever get to that 2% target?
Not likely.
Never.
Not likely.
Never. But you know what?
Mm-hmm.
They say we will. They'll
Yep.
never stop saying they will.
Right. They refuse to raise that to 3 or higher. They probably could raise it to 3 and be more believable, but
Well,
2% is not going to.
It's the thing. Eventually it will reduce completely to the currency being just toilet paper. You don't like to see it, and it shouldn't affect what you do. But the poor people out there,
Mm-hmm.
the ones who minimum wage jobs, it really affects them more than anybody.
Well, today you had the Treasury Secretary speak at the Economic Club in New York, and he said, well, it's all not about low prices, which I thought was really, that's why the market, at least today, or at least by midday, was down as much as it was. He was saying, well, it's just not about getting the lowest price for goods. Geez, that's kind of scary when the Treasury Secretary says that. It sounds like they're not too concerned about inflation. And
Has anybody really been too concerned about inflation?
well,
I mean, they say they are. It's got to really lose an election before anybody thinks.
well, it did. It was a big, I think, a contributing factor to the past election, where people were really up in arms with prices of stuff. Whether it was houses or whether it was.
I think there's a part of that. I think mostly it was Biden, Harris were completely out to lunch, and everybody knew it.
Yeah.
And there's this guy, Joe Confidence, serving at McDonald's. I think that was the big thing. As to inflation, yeah, that's there, but I think that did have an effect. That always will have an effect.
Mm-hmm.
But every president is running against inflation.
Yeah, yeah. But I think it was the perception that the rate was going up too fast or too much. And when you have the Treasury Secretary today saying, well, it's not all about getting the lowest price for products, that's that is a little scary.
But what price does he suggest? I mean, he had to have said something to counter that as to what he wants for the fair price, the right price.
Yeah, I think the
Well,
lower prices is what people want.
people want that, but
And I think they're afraid that if the tariffs do stick, and who knows if they will or will not, the fear is that the rate will go back up again, and so this is a way of saying that. Well, it's not all about
prices will
prices,
go up,
right?
not inflation.
Right, the rate
The price.
will increase.
Mister, I'm going to be strict.
Yeah, I understand.
All right, jobless claims.
We're leading economic indicators first. Those got worse again.
Oh, yeah, I thought we were talking about
No,
that.
those got worse again.
Yeah.
Jobless claims starting to go up again. The big number you want to keep is 250,000 layoffs a week, because that historically is what begins to hurt the economy. And last week the number was at 243 for the week.
Oh, that's close.
So we're getting close.
All right. Well, now, are these government workers, or are these workers in the private sector?
Oh, I think it's a combination of both, right? Then you look at the other end.
I had an officer in the reserves, but he was also a federal worker.
Mm-hmm.
And he had sort of a sinecure because he was with the Army Reserve and with the government. And he said, if we come in late at the federal government, they punish us by making us go home early in the afternoon. And the worm has finally turned.
Correct. Oh, yeah. Oh, yeah.
Anyway, so, okay, the employment return.
That's another one starting to turn. That number, you want to see 150,000 new non-farm jobs per month. You need that to, at least historically, to grow the economy. In January, the number was short of that, was 143,000. Still, it was the 49th straight month of job creation, but now we're seeing the rate of creation go down, and we're seeing claims start to go up. So the next couple of months, those two are going to be very important to see if the economy is really slowing down or not. And that might make all the difference in what happens to the stock market in the next, 3 to 6 months.
Well, it's late in the afternoon, but we have another month coming up, and we will be here. Mike and I, will continue to live in hope.
That's all we can do.
Ladies and gentlemen, conversations with Mike Carnevale, Richard Morco. Stay tuned for next month.